some, I guess, positive news as we discuss the economy and the battle to tame inflation. The consumer price index slightly fell between November and December.
And this marks the sixth straight month of decelerating prices. The Labor Department says consumer prices dropped 0.1% in December. Inflation is still up 6.5% when compared to the same time last year.
Now, additionally, 205,000 Americans filed for first-time unemployment for the week ending January 7th. That is significant because it's 1,000 fewer claims from the previous week. President Biden addressed both economic indicators and the status of the economy earlier.
So the data is clear. Even though inflation is high in major economies around the world, it's coming down in America month after month, giving families some real breathing room.
Let's bring in CBS News reporter Sarah Ewall-Wice. Sarah, good to talk to you about this. So what does this sixth month of declines mean for our overall battle with inflation? How much are economists thinking that maybe we're starting to turn that corner?
Well, economists are welcoming this. They call this good news. This is a good report. Keep in mind, they also are saying there's still a long way to go if the target is 2% and we're at 6.5% year over year. But that is down from the November reading year over year, which was 7.1%. And that month to month, we're down 0.1% in December. That's actually the largest drop since spring of 2020 on a monthly basis. So that is good news. This is trending in the right direction. And inflation, while continuing to increase, those rates have slowed. It's the slowest pace year over year in December since October of 2021. So that's good news. What's really driving this specific report were a drop in energy costs, gasoline specifically. In 1 month, the price went down 9.4%. Right now, you look at a gallon of gas, it's $3.27. Of course, the peak last year was above $5. So that is good news. That was part of this. Food prices, those continue to go up, but those have also decelerated slightly, which is also good news. Some of that specifically, when you look at the food prices, we saw the price of eggs year over year is up 60%. So that's one thing that's specifically, but other categories of food, we've actually seen a deceleration year over year and month over month, which is good news as well. So this is a little bit of a mixed bag, but overall arching a good report.
So digging deeper on some of those numbers, and it's good you chose those sectors because that affects everybody. What you pay to eat, what you pay to get around, and to power your home. Inflation is down, but core inflation is up. I know that strips out other items. What does that mean, and why are we seeing this juxtaposition? You may have just laid that out.
So the core inflation that you're talking about, specifically, that leaves out those energy and those food costs that I actually just mentioned, because those are often more volatile. It's hard to really determine where that's going, and those go up and down quite often. But this looks at things like services and other goods, things like housing. The price of housing has continued to go up month over month, year over year. It's up 7.5%. Not a great sign. There is data that we could see this continually starting to ease some in terms of housing, which is a huge part of people's budgets. But there are other things here to keep an eye on when it comes to core inflation. Core inflation includes services. That's something that is a little bit harder to bring down the price of services. When we had the pandemic, a lot of this shifted to goods, driving up the cost of goods. Now it's kind of coming back to services. So that is something to keep an eye on moving forward. But overall, core inflation is down. It was 6% before. Now it's 5.7%, even though on a month-to-month basis it has continued to go up.
So, Sarah, tell us how these newly released economic indicators are likely to translate into the Fed's decision for its next interest rate hike.
You know, these numbers, looking at what economists were talking about today, they're looking at maybe this could mean that there'd be a 1/4% hike, rather for a 1/2 percentage point hike at that Fed meeting coming up. That announcement will happen on February 1st. There's been some questions about how much they will raise rates this year. It's not expected that they will cut rates this year, but they could actually ease the rate of increases. We saw a 1/2 percentage point increase at the last meeting last year, so we could see this further easing. So there was good news when I spoke to you guys last week about that jobs report, higher than expected jobs numbers added in December, and now we see that inflation is easing, so this could be further motivation for them to relax a little bit, though we don't expect them, obviously, to stop hiking prices for some time to come.
All right. Well, a lot to digest there. It's great to have you explain it all and break it down for us. Sarah Ewall-Wice, see you again soon.